What's up guys, this is Teddy. Welcome to my YouTube channel. In this video I'm going to be talking about 5 great investment properties for beginners. So many times I'm often asked the question, Teddy, where's a good place to start in real estate investing? I believe that there's so much information out there. There's so many different types of investment properties that many people just don't know where to start. So I'm going to give you some great tips on how to find investment properties that are, number one, relatively safe, relatively stable, and relatively lower price. They don't have a huge barrier to entry. Forewarned though that real estate investing always comes with risk, and even though these are some of the more safer and stable investments out there, they're not totally risk-free. The first real estate investment that I always recommend is going to be the 1,000 to 1,500 square foot Brick Rancher. This is what I call the American classic. The Brick Rancher is probably one of the most stable real estate investments out there. It never goes in style, it never becomes a fad, and it never goes out of style. It holds its value relatively well. The simple thing to do is to, number one, find a Brick Rancher that's located in a good area, in a Brick Rancher subdivision in your area. Buy it, hold it for 20 years, and the likelihood that you're going to come out with a capital gain if you do sell it down the road is going to be pretty much, as sure shot as you could possibly get. Many people wonder, should I buy a 3-1 or a 3-2? I think it's always best to shoot for a 3-2 just because of renter or buyer preference. Everybody's always going to want that extra bathroom, but I've seen 3-1s actually cash flow pretty well too, simply because they're a little bit cheaper, and most of the times people who are renting these types of houses aren't going to mind one less bathroom. If you're feeling a little risky and you want to turn up the profit potential knob on your real estate investment, so to speak, what you can do is you can purchase one of these that needs a light rehab, maybe change out the carpets, paint the walls in it, and you can build some equity that way. So the second real estate investment that I always recommend is going to be small multifamily. Things like duplexes, triplexes, quadplexes are going to be, once again, very stable and very high performing assets at the same time. The only problem that you may run into with duplexes, quadplexes, and triplexes is that in this market they're incredibly difficult to find, and there's always people that want these types of properties, even in the most vicious bear markets that you could possibly imagine. They hold their value incredibly well. What makes a duplex, triplex, and quadplex cash flow so well and be so high performing is, number one, its design. When there are more people living in a property in such a small area, the likelihood that it's going to produce a lot of money in comparison to a single family residence is going to be a lot greater. The great thing about the design of multifamily is going to be, if somebody actually moves out of your property, you still have other incomes to rely on. This also makes it very attractive to people who do live in flips or house hack. What you can do is you can live in one side of the property, you can rent out the other sides to other people, and likelihood that the rent is going to pay your mortgage is going to be very great. 3 is going to be the live-in flip, or many times people call it the owner-occupant flip. The idea of this is very simple. You go to a very nice neighborhood, or a neighborhood that's very up and coming with BMWs and very nice cars parked out in front of the houses. You find a dilapidated house in that neighborhood, you get a very low interest rate loan on it, you live inside of it, and while you live inside of it, you renovate it. This, in my opinion, is one of the best ways that you could possibly build wealth as a new real estate investor. Say you purchased a house for $100,000, you lived in it, you renovated it, and now it's worth $200,000. Just built all of that equity inside of it. Not to mention, because you are an owner occupant, you can take advantage of government subsidized loans. So you, not only on top of all the equity, you've got a super low rate loan, and you've probably got great terms, but in return you can sell it, or even better, in my opinion, you can continue to rent it out. You can move out and you could find another property to do the same thing too. And you meet people like this out in the real estate world. They're continuously moving. What they're doing is owner occupant flips. And if you think about this, if you did this over a decade and you did this to 5 houses, you have built some serious wealth there. And this can be done by younger people, this can be done by newbie investors. How exactly do I find dilapidated houses in neighborhoods? What you can do is you can simply, it's called driving for dollars. You can drive around the neighborhood, you can prospect absentee owners, you can send out mailers to people in the neighborhood. Extra tips here. So If you're planning to flip a property right after you've done all the renovations, you want to make that property pertain to a retail buyer. So if you're planning on doing a very short flip, what you want to do is you want to put things like granite countertops, very nice master bathrooms. But if you're planning on actually renting that property out after you flip it, you don't want to add things, very nice things like granite countertops in there. You want to have cheap appliances. You want to have things that you're not worried about a renter destroying, because a renter is not going to treat those granite countertops as nicely as you would. So don't go all out on the renovations if you plan on renting it out in the future. Number 4 is going to be the college investment property. Now, college investment properties are a breed of animal unto their own. The thing that you have to realize about college investment properties is that they have higher returns. Usually when you buy a college investment property, you expect it to have a little bit higher return, simply because there's higher turnover and there's more expenses that are involved with repairs, because college students tend to throw parties. They move out after 6 months. They usually are a lot more transient than the typical renter, so you need to take that into consideration. The thing about college investment properties is going to be colleges, even with online courses and a lot of people foregoing college, college is always going to be needed, and most people still want the full college experience. And you're always going to be able to find great investment properties, great brick ranchers, townhomes in these areas that are going to have very nice returns. Okay, so number 5 is going to be, this is one that I very rarely hear people talk about, is going to be hospital investment properties, or investment properties that are located near actual hospitals. And these could be duplexes, these could be single family residences, and the people that are in the healthcare profession tend to be highly paid and have very stable incomes. There's nothing better than knowing that your investment property is leased out by a healthcare professional or some type of nurse or some technician in this field. Developers know that near hospitals there's going to be a huge demand for housing, so you can always pick up great investment properties near hospitals. You can do things like flip them, or you can do your more traditional buy and hold for some serious stable income. So the last part of the video, I've talked about all types of great investment properties for beginners, but next I'm going to talk about financing options for beginners. First one, and this is the one that you should always consider before any other means, is going to be your traditional government subsidized loan, or loans that are geared towards first-time home buyers. This could be FHA, this could be VA, this could be USDA. You want to try to aim for a government subsidized loan before you start thinking about conventional loans, because they have higher rates, and in this lending environment, a lot of times you can get 3% down loans on FHA properties, which in my opinion is a great deal. Maybe you don't have excellent credit, or you have 1099 income. What you can do is you can find portfolio loans, investment loans. These are loans that are based off of the financials for an investment property. So if the investment property has great cash flow, has a very nice DSCR, and if you don't know what DSCR is, I have a video on that. You can still get a loan even if you are not the best applicant. The last one is going to be seller financing. So seller financing isn't as complicated as many people think it is. Basically, the seller is going to give you the mortgage for the property. So instead of going out and writing a check to a local lender or bank in your area, you're going to be sending your monthly mortgage check to the seller, and it's going to have the same terms just like a regular loan would, like a rate, a principal amount, and monthly payments that you're going to have to make to the seller. The difficult part about seller financing is actually finding seller financing deals. Seller financing deals are going to be obtained through prospecting what are called high equity owners, or people who own properties 100% outright in your area. So obtain a list of high equity owners, maybe cold call them, send mailers to them. Try to find an owner who is open to the idea of seller financing. Typically it's older people who want to get out of the real estate investing game. It is people who have inherited properties, or some type of out-of-state absentee owners where they still want the monthly payments and they don't need the cash outright just then. Seller financing can be great, but a lot of times you're going to have to deal with the fact that sellers are more than likely going to want you to pay over market value for the property, maybe $5,000. But if you could obtain a seller financing loan, maybe get 100% down, maybe 3% down, 10% down, and get a great rate on it, it may make sense to pay a little bit over market and obtain a great property with great terms and have the ability for the property to cash flow over long periods of time, maybe do some light renovations, build some equity there, and you have the ability to get a loan on a property with no credit, horrible credit, and not even having any financial assets. It really boils down to what the seller wants, or if the seller feels comfortable giving you the loan. But anyway, that's my video for today. I hope that you guys enjoyed this. If you did, make sure to hit that like button, make sure to hit that subscribe button, and as always, thank you for watching.